If you're retired or soon to be retired, meaning you plan on retiring within about the next 10 years, one thing that we definitely recommend that you do, especially in the current environment we're seeing right now with the economy and the stock market, is to stress test your portfolio. Get an analysis done to see exactly how much risk you have inside of that portfolio. If all you're being told is that you're diversified, then I think it may be time to get a second opinion. The stock market's had an incredible run. We've really enjoyed the performance that we've seen since really the beginning of 2009. But I don't think that the stock market's going to continue to grow at such a rapid rate like we've seen in the past. Hopefully I'm wrong. Hopefully it continues to go that direction. But I think we're going to get back to really more normal types of returns, and that means that we're going to have some volatility and possibly even some market corrections. What if another 2008 happens or another September 11th happens? How do you know what the impact's going to be on your portfolio? Are you truly diversified? Do you have enough diversification, or do you have too much risk, too much safety? Get an analysis done that can really answer a lot of these questions. We have software that can help. We have over 100 years of historical data, and what we'll be able to do is really project for you exactly what the impact will be on almost any scenario that you can think of. We can test for things like what if we were to just see another correction, or we can go into more detailed analysis, like what if we go to war with Iran or North Korea. We can also test for some positive things that can happen as well. What if GDP continues to improve? What if unemployment continues to go down? We can show you basically the impact of good or bad scenarios. Now, one of the things we always mention is nobody has a crystal ball, but almost any scenario that you can think of that could happen to the economy, the stock market moving forward, something similar has certainly happened in the past. So because we're able to take a look at this historical data, we can plug your specific positions that you own right now, whether it be stocks or bonds or mutual funds, into the analysis, and we can basically show you what that impact will be. One of the reasons why we definitely recommend this for anybody that is within 10 years of retirement or obviously already retired is because if we were to see some sort of a correction, and nobody again knows exactly when that would happen, but if it were to happen, with sometime within the next few months to the next couple of years, I don't think anybody should really be shocked or surprised. It's pretty common that we have those, but even though it's been quite a while since we've had our last one. But if we go through some sort of a correction, the average amount of time it's going to take individuals to recover from that is right at 7 years. If you look again at the 100-plus year history of the stock market, when we've had corrections, the average amount of time it takes individuals just to get back to even, just to get back to right where they were before the correction, is an average of 7 years. Now, sometimes it's a much shorter time period than that. Sometimes it's a 6 or 7 months, 2 years, 3 years, something of that nature. But sometimes it's much longer than 7 years. The longest it has ever taken was 18 years for individuals just to get back to right where they were. When you factor in things like possibly taxes or certainly inflation, then that's going to make the true recovery even longer. But I'm just talking about just on paper to get back to where they were. An average of 7 years, the longest it's ever taken is 18 years. So as you move closer and into retirement, you just don't have that luxury to wait for things to get back to where they are today. So if you would like to, this is very, very simple. All you have to do is give us a call at the office. You can visit our website and request an appointment time. What we would need to do is just sit down with you, ask a few questions, and then have you provide whatever statements you would like us to analyze. We can analyze the entire portfolio that you have, or maybe just a few of the positions. If you just have a few stocks that you're concerned about, or maybe just a few different mutual funds, you're not really sure how they'll perform, or if the account's truly diversified or not, we can either look at everything all at once, or we can drill down and look at each specific account or even each specific position and show you exactly what the projected impact would be through a series of different scenarios for, again, either good or bad things that we can think of or you may be concerned about right now that could happen. So please give us a call at the office, schedule a meeting, and we'll be happy to run these reports for you.